Hey everyone, me Kevin here. In this video, we're going to go through a first look of Donald Trump's new tax plan, currently released with a House mock-up for budget reconciliation. Now, we're going to have to get through the budget reconciliation rules, so maybe not all of this is actually going to make it through in the final version of the bill that the House and Senate end up passing, since in order to actually pass this, it's unlikely you're going to get Democrats involved. So you're going to have to pass this through reconciliation. In other words, you get the 51 vote majority and boom, you can slam dunk this tax bill. But here's so far what's included. First of all, we're reducing excise taxes on silencers to $0. So in case you wanted a suppressor for your firearms, $0. We're also going to be increasing the debt limit, at least, by about $4 trillion, just so we don't have to go back and forth with debt limit negotiations every single fiscal year, or kick the budget can down the road all the time. Then we'll get into actual documents. I'm going to go in reverse order here because I actually think it's most entertaining to go in reverse order here. So first, we're going to terminate the clean energy vehicle tax credit. In other words, if you are going to buy an electric vehicle, the $7,500 tax credit ends at the end of 2025. Now, that's actually a little bit of a boon to Tesla because Tesla in Q4 got a really big surge of orders for people who thought that the tax credit would expire in 2024 and basically immediately expire in 2025. It looks like presumably Elon was able to get this to expire at the end of 2025. So you got a little bit of a bridge here. Nice little win for Tesla there. Great job to everybody involved there. But that electric vehicle tax credit, as Donald Trump promised, will be going away. So I think a lot of the plan is really designed to come from the angle of, hey, Donald Trump made promises and here's what we're doing to fulfill those promises. And you'll see some of them are in line with this. Some of them are surprises in terms of more than we expected. Some of them a little less, like the no cash on tips part. We'll talk about that in just a moment. And so far, I haven't seen the no tax on Social Security portion yet, but I did see that seniors over 65 would be able to increase their standard deduction by an additional $4,000 over other non-seniors. So I think that's how they're trying to address that. And sort of the fairest way, I think, is their POV. I'm not entirely sure about that, but that's what the doc has so far. We've also got for opportunity funds. They got a mention in this for those of you interested in real estate. I was actually surprised you didn't really get any kind of like expanded opportunity zone tax credits or anything here. You just got more reporting requirements, which is probably a good thing, but not much in the way of expansion there. You did finally get in health savings accounts. I love my health savings account. I threw it all in Tesla stock and it's done very well over the last few years. But health savings accounts originally were only available for people with catastrophic health plans, and that's now expanded to include bronze and catastrophic health plans, so it should open up that high deductible health plan eligibility. These are really cool, by the way, because if you put, let's say, $10,000 into a health savings plan, you get to write off that $10,000 as a tax deduction, right, because you're funding into an HSA. Then there are limits. I'm just using 10K as an example. There are limits to how much you can put in. That can grow tax-free as long as you're using it for a qualified medical expense, which could be a whole host of things, including fertility treatments, which is kind of wild because ordinarily fertility treatments would not be tax deductible. But in this case, through a health savings account, you would have the tax deductibility of the money up front, tax deductibility on basically the growth, because you're taking it out for a qualified medical expense, and then you're paying for something essentially in a tax with tax-free money. HSAs are great. I wonder if my link still works. I haven't pitched them in a while, but I had a referral if you go to metkevin.com/HSA. Yeah, it still works. Oh, that's crazy. metkevin.com/HSA. That still is a paid sponsor of the channel, well, through an affiliate relationship when I refer people to them. But that's where I set it up, and it was really easy to set it up. So I'd encourage you to check them out. Great expansion here on HSA, so that'll be really good. A lot of people don't use it because they don't have a high deductible health plan. But Bronze is going to expand that audience, especially for younger individuals who would be more likely to have a Bronze plan. I don't actually have a bronze plan anymore, but that's also because now we have a lot more little young children who need a little bit more help. But anyway, here's also an employer credit coming for health coverage. So this is interesting because for the first year of coverage that you provide health plans, you would be able to, as a business, claim $100 multiplied by the number of months for which the employee is enrolled during the first year in the credit period. So it's kind of like an extra little tax deduction for businesses to provide health insurance plans to their employees, which is cool because the tax or the business can write it off as an expense, and then the employee doesn't have to pay taxes and then buy health insurance, right? So it kind of is a little bit of a win-win there. They're also going to open this thing called MAGA Contribution Pilot Program. Now, this appears to be some form of a savings account, and it would be a one-time credit, a tax credit you would get of $1,000, but it's only for children born between, it looks like after December 31st, 2024 and before January 1st, 2029. So basically during Trump's term. Almost everything that's added in here requires a social security number. I have not seen any mentions of tax benefits that go to people with taxpayer identification numbers. So it'd have to be a social rather than a TIN. It's official. Meet Kevin has finally partnered with a gold company, but not just any gold company, a gold company that's an education first company, which is awesome because you know me, I'm all about perspective and education first, and I call myself the no pressure agent. And that's what Lear is, a no-pressure company for buying gold. It's the only company with a 24-hour risk-free purchase guarantee, over 27 years in the business, and over $3 billion in trusted transactions with thousands of 5-star reviews. Now, look, we've already talked market almost daily here. We know every institution seems to be hyping up gold, and it makes sense. Because if we're going to head into a recession, it's not so much the volatility of the recession when it comes to gold prices you want to worry about. It's certainly a safe haven asset. But you know what I think. When that money printer turns on again, you know what people like investing in. And that's why people like diversifying away from paper money and getting into a safe haven asset like gold. So if you're interested in diversifying to gold, check out Lear Capital. Give them a ring or go to their website. You can call 1-800-707-4575 or go to Lear, that's Lear, Kevin.com for your free gold and silver reports as well as investor kit to learn how easy it is to own gold or silver in your IRA or just have it delivered to your door and you can do whatever you want with it. Under the mattress, in a safe, or you decide. Anyway, give Lear Capital a shot over at 1-800-707-4575 or learkevin.com. Also, keep this in mind. First-time buyers can get up to a $15,000 bonus in bonus gold with a qualifying purchase. So make sure when you call 1-800-707-4575 or you go to Lear Capital's website, learkevin.com, you ask them about that $15,000 bonus. Make sure to let them know Meet Kevin sent you. In this MAGA savings account, to me it sounds like almost like a retirement account, but you kind of open up this savings account for a brand new child, essentially. So trying to incentivize children. Okay, that makes sense. This is something we've heard on the campaign trail as well, so that sounds logical and aligns with what Trump has promised. Then this is interesting too. Additional elementary, secondary, and homeschool expenses treated as qualified higher education expenses for purposes of 529 accounts. All right, in English, if you've ever done a 529 educational savings plan for like college expenses or whatever, now you're also going to be able to include professional credentialing and homeschooling. Now, both of those are awesome because it really expands your ability to use that 529 plan throughout the rest of your life. Say in the future you want to become, I'm guessing, we have to verify all of this obviously, and the bill still has to pass. This is just a draft in the House. I'm guessing like, hey, I want to become a pilot. Okay, you could use a 529 plan towards that professional credentialing. Or I want to be a doctor or a lawyer or whatever. Doctor, a lot of that is obviously school related, but what if maybe you want to be a real estate agent? Maybe you could use this to become a white-collar professional, become credentialed as a white-collar professional, and therefore you could use a 529 plan to spend on that credentialing. And homeschooling, I mean, that's just a big shout out to, obviously wealthier people who are homeschooling, which is usually you find that amongst wealthier individuals who couldn't previously use 529 plans for that. There's also an enhanced adoption credit, which will now basically take the $5,000 adoption tax credit that exists and make it refundable. Quick explanation, when somebody says a tax credit is non-refundable, it means you have to owe at least $5,000 in taxes to offset that $5,000 in taxes. But what if you are broke and you make no money and you have zero taxes, but then you adopt the child? Obviously questionable as to whether or not you should adopt the child if you're broke, but let's just say for whatever reason you owe zero taxes. Okay, I don't know, maybe you lost money in a business or something. Like you got the money to support a family, but you lost money in business or something, right? Well, you could now take, if you owed zero on your personal taxes and you adopted a child, you could get a $5,000 check for adopting the child. So it's basically a refund, kind of like the COVID stimmy checks. Those were technically refundable, while some of them were. Kind of interesting. There's also, and this is all just like first glance at some of this stuff, extension of paid family and medical leave credits for employers to essentially provide more credits to their employees. And employers are also getting more tax credits for qualified childcare expenses. So if a business has, let's say, a childcare facility on site, or if you're a small business and you pay all of your employees a certain amount for nannies or for, educational expenses for children, then that tax credit for businesses is actually going from 25% to 40% for qualified businesses, up to 50% for small businesses, up to $600,000 in credits for small businesses being those defined as making under $25 million in gross receipts, not net, gross receipts per year. And then keep in mind, there are aggregation rules. So typically, if one owner has, let's say, multiple businesses, you would generally have to have the same child policies amongst all the various different businesses. So you can't sort of like carve out, the benefits you want to give to one business, but not to another. That's the point of the aggregation rule, at least. No tax on car interests. So this is going to be for qualified passenger vehicle loan interest between basically 25, 6, 7, and 8 for a personal vehicle. So it can't be a fleet sale, can't be a commercial vehicle, so not so great for businesses, can't be salvage title, and you can only write off or pay basically take the deduction basically on the amount of interest for any taxable year not to exceed $10,000. So it's kind of, if you're paying 30% on the tax rate, you got $10,000 of interest for a car, which honestly is quite a lot. But if you're paying, $10,000 in interest per year, that would work out to $833 of interest per month. Maybe somebody's paying that. If that represents 7% interest on a car times 12, that would be like a $140,000 car. Okay, so that seems like it'd be a little expensive. But I guess you could have a higher interest rate as well, if you got a 10, 12, or whatever. But anywho, if you buy a car, you could write off up to $10,000. So if you paid 30% of taxes, it's like $3,000 in savings. Another little savings plan here. So another opportunity if you're going to finance a new car. Then you've got the extra deduction for senior citizens. Again, over 65 years old, extra $4,000 standard deduction if you make less than $75K as an individual or $150K joint. I think that's why I'm not seeing the no tax on Social Security part, but maybe I'm missing that. No tax on qualified overtime, as long as you are not a highly compensated employee who makes more than $155K, or you're a 5% owner of the business. Any of the excess on that overtime would just be taxed at as if that compensation was earned at your regular wage. So if your regular wage is $30 an hour, and then your overtime is $45, you would only pay taxes on that $30 an hour, even though you're collecting $45. So that's actually pretty big. And, you know, I expect some of these limitations might expand, but that's actually pretty decent for those working, you know, long hours and overtime. No tax on tips. This is an interesting one. It's only cash tips. So, you know, cash tips received by an individual in an occupation which traditionally and customarily received tips before 2025. So they're purposely saying that, you know, so it's like, hey, real estate agent, I'm going to pay you $1 of a commission and $20,000 as a cash tip. You know, that's not customary. So they're trying to like gate that from happening. But it also doesn't seem like, well, it doesn't last longer than the next 4 years, 25, 6, 7, and 8. But it doesn't appear to apply to credit card tips, which like you go to a restaurant or whatever, most of those aren't cash tips. So this means if you leave, you know, if this passes, it might make sense to start like keeping a lot more like $5 and $10 bills in your wallet. If you even carry a wallet, maybe you start carrying a wallet. Because now all of a sudden, if you put, let's say, a $10 tip down, that's kind of like giving somebody, you know, a $13 tip, right? So like you can kind of cash adjust for it. Whereas if you put $13, let's say, on a credit card and then they had to pay, you know, 30% in taxes or whatever, it'd be slightly less than $10. So that's interesting. For the rich folks, the estate and gift tax exemptions are getting permanently increased from 5K to 5 mil to 15 mil. Oh, and they're also increasing the, Tax Cut and Jobs Act to make it a permanent rather than an expiring at the end of 2025 Tax Cut and Jobs Act. Haven't seen anything on aviation yet, by the way. I want to look at depreciation and aviation. We'll look at those in just a moment. But here we have an extension of the qualified business deduction. That's actually going to increase the benefit for S corps, partnerships, real estate investment trusts, etc. Basically pass-through entities from a 20% write-off to 23%. That's kind of cool. Also increasing the child tax credit to a permanent $2,000. That doubles Ivanka's $1,000. Children must be under 17, must have a social, must be a dependent. They can't file their own tax return. Citizen or resident, under 400K income as a joint filer to be able to qualify for this. That will be, the tax credit will actually be temporarily $2,500 per child. So, I mean, if for some crazy reason you had 7 children, $2,500 times 7 children, that'd be $17,500 as a tax credit to offset the amount of money you owe in taxes, not as a deduction. Credit. Credit is worth $1 for $1. It's really, really good if your income's under 400K here. So very interesting. And again, $2,500 per year through 2028, and then down to a permanent increase of $2K. So that one's pretty impressive as well. And then here's the permanent sort of extension. And there's always this joke I wrote here that Republicans will never let temporary tax cuts or credits expire because they're effectively tax increases. However, they are doing that to oh man, what did they just get rid of? The EV tax credit. Duh, we started with that. So I don't remember that. But yeah, the only reference to aviation is on page 253, and it talks about some form of, it looks like deductions for certain types of maybe energy efficient or like, certain aviation fuels, like related to hydrogen and credits related to that. But I don't see anything about like aircraft depreciation getting extended, sort of special depreciation rules. But I could be wrong. Oh, wait, hold on a sec. What is this? Make rural America and Main Street grow again. Extension of Tax Cuts and Jobs Act reforms for rural America. Extension of special depreciation allowance for certain property. Okay, I sort of thought about this while I was looking at this video, so I wanted to see this here. I don't exactly know what they're referencing here regarding special property, but it is listed under the rural America portion here. So we'll have to see what this is. And deduction for R&D, so some expansion of these. Special deduction allowances. All right, well, we'll have to do some more work again. This is all under this tax relief for rural America and Main Street section here. I don't see anything regarding aviation yet. I know some people were waiting to buy like planes or boats or whatever, thinking there would be new expanded depreciation items. I did see bonus depreciation come in for sound recording in music studios, So there were definitely some niche things. And, you know, this text has only been out for about an hour now, so it's still a little early in terms of getting all of the details of this. But this is already pretty comprehensive. So make sure you subscribe, and I will keep going through this and looking for more information on this. Oh, take a look at this section here. Increased dollar limitations for expensing of certain depreciable business assets. 179 is changed from $1 million to $2.5 million, 2.5 to 4 for, yeah, again, also unclear exactly for which item this is. So we'll figure that out, but there are some small modifications, not a lot in here on those bonus depreciation items just yet. I'll keep doing some more research, but I wanted to get you that first look. If you found that helpful, consider subscribing to the channel. And folks, we'll see you in the next one. Thanks so much. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.